Welcome back to the channel Trading Simplified. I'm a trading enthusiast and love to simplify trading. To get started, just a reminder that I'm not a financial advisor and this video is for entertainment purposes only.
Talk about Lucid real quick. I didn't make too many gains on them. I actually shorted them at 48 and I was only doing 100 shares at a time. So I made $57. Not crazy, just decided to just try to get in on some of the volatility that was happening here. Kind of wish I would have held that position because that would have been a nice gain off a basic 100 share position, short position. Anyways, Lucid is really just unstoppable right now, and I don't know when the EV craze is going to end. It's all because of the infrastructure bill, and they're talking about how it really helps out EV electric companies. Anything that's like Blink, Neo, Tesla, Lucid. I mean, I'm looking at some of they're talking about how the earnings fell short here, but they're saying why it's rising, and they're talking about nobody really knows why it's going up. It's just being pumped. Lucid is a great stock for swings. And if you look at it, Lucid says they did 13,000 reservations in Q3 order book, and they're expecting 20,000 units. I mean, it's just ridiculous when you think about it because they're comparing them to like Tesla, and they're nowhere near Tesla. This company is like brand new, and they only have like less than 20,000 vehicles. Doesn't mean you can't make money off them, and that's all we really care about. But do I like buying Lucid at these levels? No. Unless I'm shorting them, that's the only way that I do it. And I should have went way harder, to be honest, because I did 100 shares at a time. And I was getting nice 20-cent spreads. But, I just got home from work. I saw it moving after earnings hours. And I said, let me just try to make something. And you know what? Just be grateful for the gains. It's not much, but you take something home with you. It's nice. Pay some grocery bills or something. But looking at Lucid, I mean, they're talking about how they have $4.8 billion in cash, so that's definitely really good. So they have a lot of money so they can actually make moves. And I just definitely want to say you should be very cautious if you're going to trade Lucid. I would follow a strict stop loss if you're going to trade them, because just look at the last 10 days. And going back to the last 10 days, I mean, they were $33. And the 33 to 48. Go back to the last month, you can see that Lucid went from $24 to 48, so they doubled. So they're up like, over 100% in the last 1 month. So you just have to be very cautious buying at these levels and just know that, you could lose 50% of your investment. All it takes is something to go wrong in the news and all the stocks sell off. So I don't bring this to discourage you. I just want you to be aware that, you don't just buy the hype train. There's a reason, I'm always just buying and selling and taking gains. And then I like to add them to certain, index funds that I have on my channel that I talk about investing for the long term. And I'm trying to think, is it FDRV, I think it is, or FSRV, I believe. There's an index fund that I actually invest in, that I do the long term, and I can bring it up to show you that I have a 2,000 share position in it just to show you. And I definitely think it's worth it to, invest in electric vehicles, but just be very careful when you're investing in these. Don't go too heavy unless it's for strictly a quick trade, because you don't want to hold this and then you're down 50%. Now, this would have worked in your favor if you would have bought and went long, but I mean, you got to put things into perspective. And a year ago, Lucid, when it was a SPAC, was literally $55, $60 a share. So, and then it sold off all the way down to $20. So we just want to be careful. If you're making gains off of it, congrats to you. That's awesome. I'm just going to keep scraping away any gains I get. I'll keep adding it to my electric vehicle fund and just take it from there. But just always be aware, be cautious. And it had this nice bounce. You can see the nice clear support level in the $40 range, 44, I'm sorry, and then this popped right here at the 44. And the reason I don't have the other Webull chat up is because I have live trading going right now, so I'm just seeing if anything's moving. Pretty much it's 6:30 and the night's ending for trading, but I always like to see whenever they post earnings, stocks just go crazy, and this was a clear example. So, but Lucid, we're gonna have to see where it goes. We'll take it from there. I wanted to bring up one more. This is DraftKings. DraftKings is a stock. I bought 5 shares today. That's not my plan. I literally just wanted to be able to follow them and know where the VWAP is at all times now. But when you look at DraftKings has really sold off in the last 6 months. But this is 3 months ago that it was selling at $62 a share, and it's down to 39, and it's showing a 27 on the RSI. I am waiting for one more red day, and I'm going to enter a position in DraftKings. On the 6 month, this is the EMA, this purple line. I'm sorry, this red line. And the EMA, it is way below the EMA line, which indicates that it is bearish. And if you look at this red line, you can see on the 6 month chart that anytime it's trade that candles are above, we're getting higher gains, right? But now that it's much lower, it is just bearish big time. So you don't want to go too heavy, but I'm waiting for that one more sell-off. I made it in my previous video. I want to get them in that $37 to $38 range. I'm hoping tomorrow's that day, because then I'm going to make a swing trade, and I'm going to try to hold them until we can retest the EMA, the 6 month EMA at $44. So I know it's a big swing trade, but I definitely believe that DraftKings can do it. And I'm looking at the chart here. Look, it was at this low, really far away from the EMA, like from 39 all the way up to 50, and it retested it. And you ever notice it just likes to retest the EMA? Even if it makes a new high, it comes back, retests it. It makes a new low, retest the EMA. Makes a new low, retest the EMA. Makes a new high, retest the EMA. Same thing is going to happen with DraftKings down here. You just don't want to be too earlier of a buyer where you don't feel comfortable making a swing trade. But I do believe that DraftKings has a lot of potential. They're a growth company, and their RSI is looking very attractive right now at 27 year to date. So this is definitely something that we'll be watching. And when they were up at 65, the RSI was above 70. So I mean, that was a good indicator to sell. So whoever's up there, that was great. That was great gains. So this is what I'm looking for, and it looks like the news shows for DraftKings that they just cut their target to $44. And how interesting, $44. That is the EMA. So I mean, that's the EMA that DraftKings would be. So if DraftKings sells off tomorrow and it's in like the 38 to 37, I'm going to start adding and start building my position, at least 500 shares at a time, and try to build up a nice portfolio size for these guys and see if I can ride them back up to 44. So DraftKings, everybody's selling them off right now, and what do you want to do when everybody's selling? You want to start picking up shares. You don't want to buy when everybody's buying up here at 65. You want to buy the dips. As long as you can tolerate the sell-off and hold for the gains, then you'll be okay. Just don't do too much of the portfolio where you're going to lose sleep at night. That's the biggest thing. And you know that when you're trading, when you're feeling uncomfortable with the amount of share position you have, you're going too heavy out of your comfort zone. Everybody has different comfort zones, and nobody really can tell you what that is. You know, when I was trading Lucid, you know, it was moving very rapidly. I just got home from work, and I wasn't willing to just risk, you know, so much money. So I decided, you know, just do 100 shares at a time, which is not my normal position. I should have did at least 500 to 1,000 shares, but that's okay. I made some gains. I was happy with it, and it just gets like your motor's back. You're picking up where to buy, where to sell, where to short, where to cover, and that's fine. And then when it's time, you can go heavy when you want, but you got to follow your stop losses. You know, I always had a 10 to 20 cent stop loss on these. So that's all I want to bring up. Lucid is definitely something to watch. I'm not really sure where the support levels are at this point. It looks like 44 potentially, but I don't even want to guess on this one. My main focus really is DraftKings, and I do believe that we're going to get a nice entry if we can just get one more sell-off. If we can get it down to 37, 36, that is like an ultimate buy zone. Because if you look at the 1 year, not even, let's go to the 5 year, you can see here that 35.72, anywhere from $35 to 35.8 is going to be a support level. So that's where I'm looking to make my entry on DraftKings. But when I make that entry, I feel comfortable holding them. I believe that they're going to come back up. I just think I'm getting a nice discount. Now, I could be wrong, and leave it in the comment section below. If you see something that I don't, or you see a catalyst that could be worse for them or good for them, definitely post it. But that's something that I'm looking forward to.